Hi, I'm Bill Borsma, founder and president of OC Consulting. And in this piece, we're busting whole life policy myths. When speaking with clients, I often hear reference to a whole life policy. I've long since learned that this is a generic reference to permanent insurance as opposed to term insurance. Few policy owners understand that whole life insurance is simply one form of permanent insurance, and the menu of options out there is wide and varied. Often, this generic terminology is harmless, but sometimes it's not. This is because there's a traditional association of what whole life is and how it works, and this conventional wisdom is too often far from the truth. In fact, whole life isn't even always whole life. As far as permanent insurance goes, it's basically categorized as whole life or universal life. And within these categories, there are subcategories. For instance, traditional whole life may be term blended, and this can make whole life policy act like anything but. Whole life from a mutual and stock carrier works differently to an extent. And with dividend paying whole life, there may be a handful of different dividend options that can dramatically affect the policy today and down the road. When it comes to the dividend, you can even find a version where the dividend for the paid up additions is put into an indexed option instead of the general account. In recent years, there's also been a proliferation in long term care riders. You can build these policies just about any way you want to, including from fully guaranteed to taking on meaningful risk. That's all with just whole life. The multitude of products built on a universal life chassis can be dizzying. There's traditional current assumption universal life, guaranteed universal life, index universal life, variable universal life. There's also a variable whole life, by the way. Within these products, there's a tremendous amount of flexibility and rider options. Just when you think you have your arms around it, you discover that there are indexed and variable universal life options with lifetime guarantees, for example. A securities based variable policy with a guaranteed premium and death benefit for life? Yep, it's out there. Try explaining to a traditionalist that there are universal life and securities based policies out there with more guarantees than, quote, whole life policies from top name mutual carriers. Why do I put whole life in quotes? Well, I see a lot of whole life policies with ABC Mutual that have about as much to do with whole life as my kid does with a clean bedroom. These aren't traditional all base whole life policies, but the policy owners understand them to be whole life contracts. I've seen whole life policies that turned out to be 1% whole life and 99% term insurance. If you expect that policy to work fine in a multi decade decline in interest rate and dividend market, well, you might want to sit down before hearing the truth. Who knows why a given proposal was initially presented? Is it the product du jour? Is it something the insurance carrier or agent is pushing for reasons that may not line up with the best interests of the policy owner? Maybe it's for commission. Is it simply because it's the product the agent's primary carrier specializes in? Was it the product the most recent wholesaler who popped into the agent's office was talking about? Maybe one more policy with that insurance carrier was what it took to get over the hump to the next council level for that cruise to the islands. This is important stuff. Too often, a policy transaction is akin to shoving pages across the desk for signatures like you see in a mortgage closing. You know what I mean. Most people have no idea what they're signing. It's inevitable, but what are the consequences? When it hits the fan, you know what the insurance carrier does every time. They pull out all those signatures that show the policy owner understood everything. If they didn't understand it, why'd they sign off? There's no recourse. No one cares what was said because the words mean nothing if they're not immortalized. The insurance ledgers that are dozens, maybe scores of pages long are theoretically in the name of consumer protection, but in reality, they're often the opposite and too often used against consumers when things go wrong or a product was misrepresented. I have to admit that it's necessary that clients ultimately have to have faith. George Michael knew what he's talking about. You just got to have faith. But is that a good idea? What about the trust but verify line of reasoning? I think there's something to that. I often see life insurance transactions that involve as much money as large private equity deals, real estate transactions, or business acquisitions. Almost every one of those deals would have involved tax and legal counsel, consultants, appraisers, inspectors, the list goes on. Tens or hundreds of thousands or even millions of dollars of advice can be spent to vet these deals. But in life insurance transactions of the same magnitude, yeah, you know the answer. Maybe it's time to rethink this. I've seen people lose millions. I've also seen people pay modest fees that resulted in saving millions. It's time to admit what we all know. Clients have a snowball's chance in Hades of figuring this out on their own. It just can't happen. I've testified to that in court. They have to have an advocate. They have to be educated enough to become partners in the decision making process. This will take some time and commitment and a little bit of money, but what that's worthwhile doesn't. Thanks for your time. As always, don't hesitate to call, email, set up a time to discuss. I always look forward to it. Have a good one.